What's going on, guys? Welcome to another video, and in this one I'm going to be breaking down today's trade that I had and called on gold using the New York manipulation model. In case you don't know what the New York manipulation is, don't worry, I've got a video for that, and the link to that video is in the description below so that you can go and check it out. So earlier today I caught along using this model. I called a pair gold and the model, the New York manipulation, on my free Telegram channel before taking my trade, which by the way is also linked below in the description in case you want to join. So let's talk about exactly what the trade was and why I wanted it. I'm talking the exact setup, the level I was watching, the entry, and the target start to finish. So if you've ever watched price run your stop and then reverse without you, this might just be the model that helps flip that around so that you can be on the right side of the trade. Now, before we get into it, don't forget to hit that subscribe button. It's greatly appreciated. All right, let's get to it. First, as the name suggests, I expect a manipulation during the New York session. Now, manipulation is usually a fake out against the prevailing trend, so it's important to establish what the trend is here. I'm sitting on the daily time frame, and we've been bullish on gold for a couple of weeks now. Price has been pushing higher. We have basically bullish order flow, and I want a piece of that trend. So what I'm going to do is I'm going to look for longs, but the question is, where am I going to be looking for those longs, right? Normally, I like using fair value gaps, but what I'm going to do is I'm just going to zoom in over here a little bit. Notice how we have this fair value gap right here, but we also have a volume imbalance sitting above it. That's this gap right here that formed at the start of Monday's candle, basically the weekly open from yesterday. Obviously, if that volume imbalance fails, then I'm going to be looking for price to come into this fair value gap, but we'll go level to level. This was the first level that I was watching today. So what I'm going to do is I'm just going to get rid of this fair value gap, and instead I'm only going to have the volume imbalance marked out. This premise doesn't just apply to the New York manipulation model, but basically how I trade any trend in general. When there's a clear trend on the higher time frame, I'm going to ask myself, where can I expect price to pull back to? And then I'm going to look for a position that'll align me with the trend as well. And I've already got the relay model that uses fair value gaps, but in general, it comes down to the trader. Some people like to look for a pullback into, say, a key Fibonacci level. ICT traders like PD arrays, like order blocks, fair value gaps. Some traders like using previous day value areas if you're into volume profiles. In this case, though, I was watching this volume imbalance, and if we went deeper, then into this fair value gap. But that's where I wanted price to pull down to so that I could then look for a potential long position. So I go down to the 15-minute time frame, and honestly, order flow was bearish to start the day. So if we take a look at what happened, we have price over here. This was the Asia session. It swept previous day's high, right? And since then, we were basically trending lower, right? But given that price is trending higher on the higher time frame, I'm keeping this volume imbalance marked out as a potential bottom for today, right? If the low of the day is to form, that's going to be where I look for it to form and look for a potential trade. Now, for those who know the New York manipulation, you guys also know that I like seeing a range form going into the New York session, especially before that 8:30 to 10 a.m. window when we have those range bound conditions. Price often sweeps one end of the range, the manipulation, before then pushing in the other direction. So if we look at price right here, this was Asia's dump after the sweep of previous day's high. Price basically stalled. We couldn't continue lower, and what happened was London formed a range here. So I'm going to mark out the high of the range. That's right there. And then the low of the range, which is over here, right? And we were basically trading between these two levels. So this was Asia lows, and this right here was London highs, right? Now, think about how many people were busy trying to trade this range and got chopped up or stopped out in this type of price action. Now, I'm of the opinion that all good moves start with liquidity sweeps. And over here, we only have sideways movement. There really isn't any liquidity sweep. And that's where I'm patiently waiting, knowing that the New York session will likely present something if the London session ranges like this. But it's not just the liquidity sweeps themselves that make a setup high probability. It's a liquidity sweep into a key level. That's the game changer. So when I see London forming a range like this above a higher time frame key level, like this daily volume imbalance, it gives me more conviction that if a New York manipulation were to happen, I'd like to see price come down, tag this level as a potential low of the day, and then for price to move back up. Of course, we could get the other way around where price instead sweeps the highs and then moves lower, right? It's important to consider the other potential game plans or the other potential scenarios that might happen. But given that my higher time frame bias is bullish and I want to look for longs, the ideal scenario for me would instead be for price to sweep the low and then bounce back up. So that's why this was my preferred game plan going into the New York session. All right, so even though I'm going against this intraday trend where price is moving lower, it definitely makes it trickier and takes a little more balls, but I'm keeping that higher time frame context in mind. Does that guarantee the trade? Absolutely not. Nothing does. But at least it gives me a framework upon which I can build my trade. Either way, 9 a.m. comes by, and that's going to be right here, right? So 9 a.m. comes, and what we're going to see is that price actually moves down right away and tags that level. And what I'm going to do actually is I'm going to move down to the 5-minute time frame. Now, once price comes down and taps this volume imbalance, I have to wait for my confirmation. A couple of things I want to add, though, is that one common point of confusion that I often used to have with volume imbalances is, do I just wait for the tap of one end of it, or do I wait for the fill? And the truth is, I don't have an answer. And sometimes there are moments where I'm going to take this trade as it currently stands, right? But what I've come to notice is that recently, price action, whenever I get a sweep, we get a sweep of the sweep. So price here swept London lows. Before just bouncing, what I'm expecting based on recent price action over the last couple of months is for price to come back down and take these lows once again, right? So that's why I actually did not take this initial trade off of this engulfing candle. Now, for those who actually know me, I like the engulfing candle as a confirmation. And not only the engulfing candle, but price actually closed back up through the low of the range. Those two are two major criterias that I like to see in order to enter a trade like this. Now, the reason why I sat it out is because I was fairly confident that price was going to come back and take down these lows. Ultimately, it comes down to just being in front of the charts and seeing it enough times to know what's been happening lately. And while this isn't a rule or anything, it's something that I have been seeing pretty often in terms of recent price action, which was why I did not take this initial trade and I decided to wait a little longer. So what happens is price comes back down again and eventually sweeps that low. And now take a look at what happens. Right here, this candle right here, the 10 o'clock candle, closes above that low. And this was exactly what I put in the group chat on the Telegram, that if price closes back above this 46.17 level, right, that's really going to give me a little more conviction that we're ready to push back up. So once again, we did close that. We did get that close over here after sweeping the low and also after tapping the volume imbalance. But like I said, based off experience of what I've been seeing recently in the markets, I wanted a sweep of the sweep. We got that, and then we closed above. But in all honesty, there have been moments, like I said, where I would have taken this first trade, stopped out, and then I would have taken it on the second attempt. It happens. So I'm going to take my entry the moment we close back through those highs with stops at the lows, and then the target is going to be opposing end liquidity, which is all the way up there, right? That was where London made its highs. That was the high of the range. The New York manipulation, that's going to be the target. Now, full disclosure, my target was not there. I took most of my profits at the 46.39 level, the 46.38 level. That was the level that I put on the Telegram. And the reason for that is because this all happened after 10 a.m., which is not ideal for me. I personally prefer the move having started before 9:30. Right? But over here, we got the move at 10, and I like being out of my trades pretty early once I enter. So I was pretty aggressive taking my profits and getting out of the trade on time. So if I let that play out, we're going to see that eventually price did make its way up to the highs, and there it was. So to recap in 4 steps, because really that's what it comes down to, right? The first is that price ranges coming into New York. That's a massive prerequisite. I like seeing one end of the liquidity tagged as manipulation before price then moves in the other direction. Second is that I want to have some sort of key level that I expect the manipulation to reach. Right now, I did that first because I was giving you a feel for my daily higher time frame bias, but that was the level, the volume imbalance, right? So if there's a manipulation, that's where I want to see price come down to. Third is that I want to see price run into that level, sweep liquidity, and that's the manipulation, right? Because you can expect a manipulation, you can see a range, you can have a key level marked out, but you never get the manipulation. So the third step is I have to wait for that manipulation to actually happen. And then the fourth is the confirmation, right? Now, like I mentioned, I personally prefer using the engulfing candle. Sometimes I use a structure shift. In all honesty, there was also a fair value gap entry over here. That low went into this fair value gap. That would have been a nice little entry as well. We also had a tag over here on this fair value gap for another move higher. I took it from down here because I anticipated that this was going to be the low of the day. And when I saw my reaction, which was a reclaim of the lows, I got my trade in and I targeted the highs. That's the New York manipulation. Range, mark the level, wait for the sweep, and trade the reclaim. Now, a quick note, everything in this video is for educational purposes only. It's not financial advice. I'm not a financial advisor. Trading carries substantial risks and you can lose money. So never risk more than you can afford to lose, and make sure you do your own research. Anyway, that was the trade. Thank you for watching the video. Make sure you hit that like and subscribe button if you enjoyed it, and I'll see you guys in the next one. Cheers.